Hi guys, welcome to part 4 of the investing in derivatives video. We're going to have a practical session where I'm going to show you how you can trade derivatives online using the platform called AVVENTO. So let's start. I'm assuming it's your first time accessing the system. So what you're going to do is you're going to visit our website, that's AIB-AXYS.com. Then place your cursor under the trading segment, so that's trading, and then click on derivatives. And then what you're going to do is you're going to scroll to the bottom and then click on this link, the link to AVVENTO Derivatives Trading Portal, and then click on that. So the moment you click on that link, normally it's supposed to take you to the login segment, but because I had already logged in, that's why it opened automatically. So let me log out and log in again. So this is what you're supposed to get. So you're going to get a place where you will key in your username. Username will be your email, and the password for a first time login will be the password, a system generated password that's sent to you. So the moment you click login, you're going to get an OTP in your email. So check your email. So let me click login. So let me see if I got my OTP. Yeah, I just got my OTP, so let me select and then paste it. Control V. Finally, I've been able to log in. When you first log in, you're going to see these segments, and I'm going to highlight the most important segments. These are segments that you'll be interacting with on a day-to-day basis. So the first segment will be the trading segment, the transaction segment, and the risk segment. These are going to be the most important segments. Actually, you don't need to know much about the other segments, just the trading segment, the transaction segment, and the risk segment. So for trading, as you can see, I already have the single stock futures and the index futures. Okay, so if you need to add, if you don't have this, all you have to do is click on the plus sign and then you can add yours. Okay, so if you don't have this on your screen, let's have a look at the trading segment. So you can see the futures are listed starting from the near month contracts, that's the 21st of December contracts, and they're listed alphabetically. So that's ABSA, BAT, COP, etc. And you can see they appear in fours. So that's the 21st of December 2023 ABSA futures, the 21st of March 2024, the 20th of June 2024, and the 19th of September 2024. Then the same for BAT, COP, EABL, Equity, IMH, KCB, NCBA, SCBK, ESCOM. Yeah. So let me define a few concepts here. So let me cancel this first. B stands for buy, S stands for sell. So when you want to buy, you'll click on B. Okay. When you want to sell, you'll click on S. Okay. So B is blue, B is green, and S is red. So and then D stands for depth. So basically when you click on D, you get the order book. Let me click on another contract, let's say Safaricom. So when you click on D, you get the order book. D for SCBK, you get the order book. So the order book basically shows the available contracts and the number and the price. So D shows the available contracts and at what price. So you can see if you want to buy ABSA, the best available offer is at 11.80 Kenyan shillings, while the best available bid is at 10.50 Kenyan shillings. Okay, so that's it on the order book. So B buy, S sell, and then depth get the order book. Then last stands for the last traded price. So L last traded price. Change basically means the change from the opening price. Then time is basically the last traded price, the last traded time. Then we have the high of the day, the low of the day, the volume, and then the open interest. So the volume stands for the number of contracts that have been traded today, while the open interest stands for the open contracts at the moment. Then you have the opening price, and then we have the volume weighted average price, and then we have the closing price. Most of the time the closing price will appear on your screen after 4:30 when the market closes and we get the closing price of the day. And then status stands for open. The market is open from 9 a.m. to 3 p.m. That's the derivatives market. Okay. So the segments you'll be interacting with mostly, as I had said, are the trading segment, the transaction segment, and the risk segment. So when you click on transactions, you'll be able to see the orders, and these orders are the orders that you have put. Mine are many because I'm using the market making account, but for you, you'll only be able to see your orders. I can see the orders of all our clients at the moment, but for now, for your case, you'll only be able to see your orders. So under orders, you'll see the orders that you've placed, but under the order segment, you'll see the orders that you've placed, but the orders have not yet been executed. Then when you click on trades, you'll be able to see the trades that you have done. Okay, so orders, this stands for the orders that are placed but have not yet been executed. Then the trades stands for the trades that have already been executed. Then when you click on positions, you will see the positions that you already hold. So for me, I can already see the positions of our clients, but for you, you will only see your positions. For open means the positions that are open, and then we have the current positions. Okay, so if you have not traded, these numbers will be similar. Okay, so let's go to the next segment, which is risk. Same case here. So for me, I can see the risks of all our client, but for your case, you'll only have one, which is your risk. And basically, you always need to make sure that the surplus or the deficit is green, because when you see the surplus or deficit turning red, that means that you have a margin call. Okay, the most important part under the principal risk is, let me use our account. You'll come to your segment here and click on exposure. When you click on exposure, you'll be able to see all the positions that you hold. So you can see you have Safaricom, ABSA, Cooperative, SCBK, BAT, and the index futures. So the most important thing to note is if it doesn't have the negative sign, it means that it's a long position, while the contracts with the negative sign means that it's a short position. So for this case, we have 2 long positions on Safaricom, and then we have 31 short position on Cooperative, and we have 4 short positions on BAT. So without any sign, that means it's a long contract, while if it has a negative sign, that means it's a short position. And then for the exposure, I think if you don't know what exposure is, refer back to part 2 of our video. So this is the exposure we get from holding 2 contracts of Safaricom, and you can see it's the same for exposure. If you are holding short contracts, you get a negative exposure, and if you're holding long contracts, you get a positive exposure. Then you have the opening price and the current price. If the contracts trade, you're going to get a change in the current price, and you're going to get a change in the current profit or loss. The reason why the current profit or loss is 0 is because we have not traded. Okay, so the moment we take a trade, you're going to see a change in this. Okay, so that's it. So let's do a trade now. So we're going to do a trade on Safaricom. So I'm going to use 2 different accounts. So I'm going to buy Safaricom contracts and then sell on the other account. So let me buy at, let me say 14.50. Let me buy at 14.50. 14.50. So you put your price there. Then the lot size, you can put any. So put 1. Let me put 1 for now. And then the principal in your case will be automatically your account, because you only have your account connected to your AVVENTO. So let me put an account AIB Capital, and then I want you guys to note what happens on the available limit when I add the lot size. So for 2, I can pick up 2. For 3, I can pick up 3. For 4, I can pick up 4. Let me put a number like 17. you see when I put 17, the available limit turns to red. So this means that you cannot take up 17 contracts with the margin that you have. So always make sure that the lot size you put here doesn't make this available limit turn red. So let me reduce and let me see. So maximum should be, so the maximum should be 9, because when I put 10 lots, it turns to, the available limit turns to red. So the maximum I can take is 9, but for now, let me just take one contract. So one, the principal is basically your derivatives account, and then ignore the reference number, ignore the additional reference number, and then come here to order type. The most common order type that we'll be using is the normal basically. So when you click on normal, this means that it expires during that day. But let me explain the difference between normal and fill or kill. So when you click on fill or kill, means that if there's a trade that matches this price, the order will be executed immediately. If there's no counterparty that matches this price, then the order will be deleted, rather the order will not be executed, right? So you only want to use fill or kill if you already see an order on board that matches your price. Otherwise, just use the normal order type. Okay, so just put normal. Okay, so note that when you use fill or kill, if you put fill or kill, if there's no order that matches your price, if there's no seller who is willing to sell to you at 14.50, then the order will not be on board. So basically the order will be eliminated. So okay, so you need to use the normal one, and then if you want the order to stay on board for quite some time, you can come and change the date of expiry to any other date. So you can say it expires on Friday, etc. So let me click on buy and let's see what happens. Let me update. When I clicked on buy, the order appears here on this segment 14.50, and when you check the order book, you can see that my order is now at the top. This is because for the buyers, the highest price is usually the best price, hence it's put at the top. While on the other hand, for sellers, the lowest price is usually the best price, hence it's put at the top. So that's the buy order. So let's execute. Let's also look at the transactions. So when you click on orders, you'll be able to see the transaction at the bottom. So you can see AB Capital, I'm buying one contract of Safaricom at 14.50. Okay, so I want us to execute the trade so that we can have something appear under the trades segment. Okay, so let me come here and sell. So I'm going to sell one contract at 14.50, so I need to use a different account. That, and then if you can remember, I told you guys, if there's a counterparty that matches your price, you can go ahead and use fill or kill, or you can just use normal. So let me just use normal and let's see what happens. You see, the trade has been executed and you can see the price has moved. Let's now go to the transactions and see what happened. So you can see under orders, the order is no longer there because the trade has been executed. But under trades, you can see that a trade has happened. There's a trade that has happened, right? You can see that there's a trade that has happened. Okay. And then when you go to positions, you can see that there's a difference in the positions. Okay. So that's it on the trading segment. Now let's go to the risk so that we can see what has happened. For the exposure, initially I was holding two contracts of Safaricom. Now I have one because I've sold one contract. You see, I was holding two, now I have one because I've sold. The opening price was 14.60, the current price is 14.50. So you can see there's a movement of 0.10. Okay, let's go to the other account that has bought. So that's UIT, and exposure, you can see now initially the account had 0 holdings, but now currently it has 1 holding of Safaricom. Okay, so at the end of the day, there's going to be a settlement price and we're going to get a new figure on both ends. I think that's it for today. So the most important segments would be the trading segment, where you see the contracts, you see where you can click to buy, and also where you can click to sell. Okay, and then if you want to see the available contracts, just click on depth, and you'll be able to see the order book. So you can click on the depth of corp to be able to see the order book. You can click on the depth of equity to be able to see the order book. Okay, and then for the transactions, this is where you click to see the orders that have not been executed. Trades, this is where you see the trades that have been executed, and positions, this is where you see your positions. And then finally for risk, this is where you see your exposure. So basically, I've told you this should be green all the time for you, because when it turns red, it means that you have a margin call. And then when you click on exposure, you're able to see all the contracts that you hold. So if it's a positive sign, or basically there's no sign before it, it means that you are holding a long position. And then if it's a negative sign before the number, means that you're holding a short position. For long position, remember, you get a profit when the price goes up. For short position, you get a profit when the price goes down. Okay, yeah, that's it for today. Remember, if you have any questions, reach out to us at info@AIB-AXYSAfrica.com.